Do you think your money is safe in the bank? More importantly, do you think you're in control of it? What if I told you the global banking system, the bedrock of our economy for centuries, is being quietly challenged by a new technology? That the whole idea of waiting 3 to 5 business days for your own money or paying crazy fees just to send cash across a border is starting to look like a relic of the past. This isn't some sci fi fantasy. It's happening right now, all around us. A parallel financial system is being built from the ground up, one that's faster, cheaper, and runs 24/7. It's a silent revolution, a fundamental rewiring of the world's financial plumbing. And the old guard, the big banks who've controlled the flow of money for generations, are being forced to wake up and pay attention. This is the story of stablecoins and how they're building a new option for finance, whether the old one likes it or not. Before we can see where we're going, we have to be honest about where we are. We live in a world of instant everything. We stream movies, order groceries, and talk to anyone on earth in seconds. And yet, our money is stuck in the 1970s. For all its marble halls and pinstripe suits, the global financial system is built on an ancient, creaking infrastructure that's fundamentally broken for the modern world. These aren't just little annoyances, they're invisible chains holding back people and businesses. First, let's talk about speed, or the lack of it. Ever tried to send money to another country? You click a button and then you wait for days. A transaction that's just digital information can take 3, 4, even 5 business days. Why? Because your money isn't just sent. It's passed along a complex chain of correspondent banks, each one taking its time, each one working on its own schedule. This system, run on networks like SWIFT, was a miracle half a century ago. Today, it's like sending a message by horse-drawn carriage in the age of the internet. The global economy never sleeps, but our financial system clocks out for nights, weekends, and holidays. For a business waiting on a payment to make payroll or a family waiting on a critical remittance, these delays can be devastating. Then there's the cost. This slow system isn't just inconvenient, it's insanely expensive. Every bank that touches your money takes a cut. Think about the person working abroad to send money home. On average, they lose about 6.5% of their hard-earned cash just in fees. That's billions of dollars a year skimmed away from the people who need it most just to use a broken system. It's a hidden tax on the global workforce. It's no better for businesses. A small online store trying to pay a supplier in another country gets hit with fees that eat right into their profits. A percentage here for currency conversion, a flat fee there for the wire transfer. It adds up to thousands of dollars a year, a toll booth economy built on inefficiency. The banking system set itself up as the unavoidable gatekeeper, and for decades, we had no choice but to pay their price. This combination of slow speeds, high costs, and a 9 to 5 mindset creates a system that shuts people out. If you don't have a bank account, you're locked out. If you live in a country with a volatile currency, your savings can evaporate overnight. The system we have wasn't designed for the world we live in. It's rigid, it's expensive, and it's controlled by a handful of institutions. For years, we were told this is just how it is. But what if it's not? What if you could build a new set of financial rails right next to the old ones that bypasses the gatekeepers completely? The answer to these problems didn't come from Wall Street. It came from the weird and wonderful world of the internet. It came from crypto, but it's not what you think. This isn't about Bitcoin's price. It's about something far more subtle and way more powerful, the stablecoin. So what exactly is a stablecoin? The easiest way to think of it is like a casino chip for the internet. When you go to a casino, you don't use cash at the poker table, you swap it for chips. Those chips represent your money. They're easy to use and work perfectly inside the casino. A $1 chip is always worth $1 when you cash out. It's stable. A stable coin is the same idea, but for the entire digital world. It's a digital token on a blockchain designed to hold a steady value, usually pegged 1 to 1 with a major currency like the US dollar. It's a digital dollar. This is what separates stablecoins from cryptocurrencies like Bitcoin or Ethereum, which are famously volatile. You can't run a business or pay rent with something that might be worth 20% less tomorrow. Stablecoins fix this. They are built for stability, not for speculation. They're the boring, predictable, and because of that, revolutionary heart of a new financial system. But how do they stay stable? How can a token be worth exactly $1? The most successful way is through full collateralization. For every digital dollar, every USCD or USTT token created, the company that issues it holds one real dollar, or a super safe equivalent like a US government bond in a real audited reserve. This means anyone can, in principle, swap their digital dollar back for a real one. It's a simple, powerful promise. A digital version of money that's fully backed by the real thing. It's a bridge between the old world of finance and the new world of the internet. And it allows value to flow across at the speed of light. Once you have this stable digital dollar living on the internet, the solutions to the old banking problems become obvious. You're no longer stuck with the old infrastructure, the business hours, or the middlemen. You're now on the blockchain, a global computer that never, ever sleeps. First, the speed problem all but disappears. A stablecoin transaction doesn't get routed through a dozen banks in New York and London. It moves directly from the sender's digital wallet to the receiver's peer-to-peer. The settlement is confirmed by a global network of computers, not clerks. And how long does it take? It can range from a few minutes to a few seconds. The idea of 3 to 5 business days becomes a joke. It's the difference between mailing a letter and sending an email. Money now moves 24/7, 365. Christmas morning, Sunday afternoon, 3 a.m. on a Tuesday, the system is always on. Next, the cost. Remember those hefty remittance fees? Remember the thousands in corporate banking fees? Gone, or at least reduced to almost nothing. Because you've removed the middlemen, you've removed their fees. The cost of a stablecoin transaction is just the tiny network fee paid to the computers that process it, often just a few cents, whether you're sending $10 or 10 million. The impact is staggering. Studies and real-world use cases show that stablecoins can slash cross-border transaction costs dramatically. This isn't just theory, it's changing real people's lives. Think about a web developer in Southeast Asia working for a client in the US. In the old world, she'd get paid, wait a week, and lose a chunk to fees. Today, her client can pay her in USDC. The money arrives in minutes, and she can convert it to her local currency, losing pennies on the transfer. This is financial empowerment on a scale we've never seen. Or think about a business owner in a country like Argentina or Turkey, places where hyperinflation can destroy a lifetime of savings. Holding local currency is like holding a melting ice cube, but getting a US dollar bank account is nearly impossible. With stablecoins, they have a lifeline. They can convert their fragile currency into a digital dollar on their phone, completely outside their local banking system and safe from inflation. This is more than a better payment system. It's a tool for self-preservation. For bigger companies, this tech is changing everything. Instead of cash being locked up in different bank accounts around the world, they can use stablecoins to manage their capital in real time. They can pay international suppliers instantly, automate payments with smart contracts, and see all of their cash in one place, 24/7. This isn't just a small upgrade. It's a replacement for the old plumbing of global commerce. To really get how this parallel system is being built, you have to look at where stablecoins first found their footing, as the secret engine of the crypto and decentralized finance DeFi world. While headlines were screaming about Bitcoin's price, stablecoins were quietly becoming the foundation of a whole new financial universe. In the wild crypto markets, where assets can swing 20% in an hour, traders needed a safe place to park their money without cashing out to a slow bank account. Stablecoins were the perfect answer. If a trader thought the market was about to drop, they could sell their Bitcoin for USDC in seconds, wait out the storm, and jump back in just as quickly. They became the safe harbors in the chaotic crypto seas. They are the poker chips of the crypto casino, providing the stability needed for the game to even be played. But they quickly became more than just a trading tool. They became the lifeblood for the explosive movement known as DeFi. Simply put, DeFi aims to rebuild everything a bank does: lending, borrowing, earning interest, exchanging assets, but without the bank. No loan officers, no trading desks, just code run by smart contracts on a blockchain. For these DeFi money Legos to work, they need a stable asset. You can't have a reliable lending system if the value of the loan is jumping all over the place. Stablecoins provide that solid ground. People can deposit their stablecoins into a DeFi lending protocol and start earning interest, often at a much higher rate than a traditional bank would ever offer. Decentralized exchanges use huge pools of stablecoins to let users swap between thousands of digital assets instantly. This DeFi ecosystem is the sandbox where the parallel financial system is being perfected, and stablecoins are the blood flowing through its veins. This isn't a small experiment anymore. Well over $100 billion billion are locked in these DeFi protocols, all powered by the quiet stability of the digital dollar. This is the new financial plumbing being laid, piece by piece, completely separate from the old world. If you're starting to see how deep this rabbit hole goes, do me a favor and hit that subscribe button. We're about to get into how the old guard is fighting back and why their reaction is the clearest sign that this revolution is real. You won't want to miss it. For a long time, traditional finance laughed off stablecoins and DeFi as a niche casino for crypto nerds, irrelevant to the real world. That was a huge miscalculation. The tools and efficiencies perfected in that DeFi sandbox are now breaking out into the mainstream, and they're starting to eat the bank's lunch. The biggest sign is that pioneering corporations are starting to use stablecoins for their own treasury operations. This is where the secret replacement becomes tangible. A huge, profitable business for global banks is managing cash for large corporations. It's been a protected business, a deep moat of complexity. Stablecoins are blowing a hole right through that moat. Imagine you're the CFO of a company with offices in a dozen countries. In the old model, you have a dozen bank accounts in different currencies, and moving money is slow and expensive. Now, using stablecoin platforms, you can hold your company's cash in a single digital wallet as USDC. You have a perfect real-time view of your cash. If you need to pay a supplier in Japan, you don't file a wire transfer and wait 3 days. You send a stablecoin payment that arrives in minutes for pennies. This allows for incredibly efficient capital management. You can automate payroll and supplier payments with smart contracts, ensuring they're paid exactly on time. Forward-thinking payment networks and fintech companies are already rolling out these services. They are, in effect, letting businesses bypass their traditional banks for their most critical transactions. What's fascinating is that this disruptive tech is actually reinforcing the US dollar's global dominance. The vast majority of stablecoins are pegged to the USD. As more people and businesses around the world use these for trade and savings, it dramatically increases the demand for the US dollar. The reserves backing these stablecoins are mainly held in safe dollar-based assets like US Treasury bills. So, as the stablecoin market grows, so does the demand for US government debt, strengthening the dollar's position as the world's reserve currency. It's a strange new world where an anti-establishment technology is accidentally becoming a key pillar of America's financial power. Of course, this story isn't all sunshine and rainbows. To pretend this path is smooth would be a lie. The crypto world has seen catastrophic failures, and these events have given skeptics plenty of ammunition and rightly spooked regulators. To build a credible new system, you have to learn from the ghosts of the past. The most famous collapse was the Terra/Luna ecosystem in 2022. The world watched as $40 billion in value vanished in a few days. The centerpiece was a stablecoin called UST. But UST wasn't backed by real dollars. It was an algorithmic stablecoin that tried to maintain its peg with a sister token and complex code. In practice, it was a house of cards. When confidence wavered, the whole thing entered a death spiral and collapsed to zero. It was a brutal lesson. If you want to be stable, you need stable backing. You can't just print stability out of thin air. Then there's the controversy around the biggest stablecoin, Tether, USDT. For years, Tether has been dogged by questions about its reserves. Is there really one liquid US dollar for every UST dollar out there? The company has paid fines to regulators for past misstatements. While Tether continues to operate and grow, that cloud of doubt has never fully gone away. These events highlight the absolute need for transparency, auditing, and smart regulation. Without them, the whole system is built on sand. The banks and governments of the old world aren't stupid. They see the writing on the wall. They see the money flowing through this new parallel system they don't control, and they're building walls. The Wild West era for stablecoins is over. The empire is striking back. We're now seeing a global push to bring stablecoins under the regulatory umbrella. Europe passed a massive rulebook called MiCA, which sets clear standards for any company issuing stablecoins in the EU. But the biggest move yet happened in the United States. In July of 2025, after years of debate, Congress passed the landmark Genius Act, the Global Enterprise for Networked and Uniform Stablecoin Act. This law fundamentally changes the game. It creates a clear federal framework for stablecoins, making it law that issuers must be licensed and hold one-to-one reserves in cash or short-term government bonds. No more algorithmic experiments. It also requires regular public audits and full compliance with anti-money laundering laws just like a bank. This is the ultimate double-edged sword. On one hand, it's a huge moment of validation. Stablecoins are now a recognized and regulated part of the US financial system. This clarity is expected to unleash a wave of adoption from big conservative institutions that were waiting on the sidelines. Projections that the stablecoin market could swell to over $2 trillion now seem entirely possible. On the other hand, this is a form of capture. The revolutionaries are being brought inside the fortress. The price of mainstream acceptance is playing by the old system's rules. The dream of a completely ungoverned form of money is fading. The reality is a hybrid system, where the new tech is forced to operate within the legal frameworks of the old. The banks couldn't stop the technology, but they and their government allies are now racing to control it. So, what does the financial world look like in 10 years? Your bank isn't going to disappear overnight, but its role is likely to be fundamentally changed. We may be moving towards what some experts are calling a two-tiered financial system. Tier 1 will be the new digital rails powered by stablecoins and blockchain. This is where fast, global, and programmable money lives. Day-to-day payments, e-commerce, remittances, and business transactions will happen on this layer. It will be the default plumbing for instant value transfer. Tier 2 will be the legacy banking system. Stripped of their monopoly on payments, banks may retreat to services where their structure still provides value, namely long-term credit creation. Their business will focus on things like 30-year mortgages and complex corporate loans. They won't be the operating system for money anymore, they'll just be another app. Looming over all of this is the specter of central bank digital currencies, or CBDCs. As governments see the power of this tech, many are racing to create their own versions: a digital dollar, a digital euro, controlled directly by the central bank. This is their ultimate counter move. Why use a private stablecoin like USDC when you can use an official Fed coin? This sets up the ultimate battle for the future of money. Will our digital future be based on open, decentralized protocols? Or will it be based on centralized, government-controlled tokens that could offer unprecedented surveillance and control? The story of the last few decades is the story of the internet dismantling one centralized industry after another. It happened to media, to communication, to retail. Finance was the last great fortress, but the cracks are showing. The system that makes us wait days and pay fees to use our own money is not just old, it's becoming obsolete. Stablecoins, born from the strange world of crypto, have provided a working alternative, a financial system that is faster, cheaper, and more accessible. The revolution isn't a distant threat to the banking system, it's happening now. The quiet challenge is already underway as billions of dollars every day flow through these new digital rails, bypassing the old toll roads entirely. The question is no longer if this technology will change the world of money. The question is who will control the new system. Will it be the open protocols of the internet or the same centralized powers they were designed to bypass? The battle for the future of money has officially begun. What do you think? Is this the end of banking as we know it, or is this all hype? I want to know your take. So leave a comment down below. And if you want to stay ahead of the curve on the biggest financial and technological shifts of our time, make sure you're subscribed with notifications on. Thanks for watching.